Hello and welcome to this session in which we will discuss how the auditor evaluate the management description in a SOC 2. Now obviously if we are discussing SOC 2 it means we already covered SOC 1, and SOC stands for System and Organization Controls. Now the difference between SOC 1 and SOC 2 is the scope of the engagement. In SOC 1 we'll talk about the internal control over financial reporting. In SOC 2 we're going to be talking mostly with trust services. Now in a SOC 2, we have to understand there's going to be many steps that are similar between SOC 1 and SOC 2, how the auditor would evaluate the management description, which is you should not be surprised. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com.
Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today.
So in an audit of a service organization, the service auditor is responsible for what? Examining the organization's description of its system to ensure it aligns with the established criteria. Now, yes, that's what they have to do. How do they do it? Well, the first thing they do, they ask them for the description itself. And take a look at this document. They first obtain a document that describes how the service organization systems operate. And this document would include details about the processes, controls, and data management practices the organization uses to deliver services to its client. And that's the first source. So if you want me to evaluate your system, tell me about your system. Now, what's going to happen? The next thing is we're going to have to verify against description criteria. The criteria against which the description is evaluated are predefined standards that outline how such description should be presented. We're going to look at the standard and look, is it up to the standard? So these standards ensure clarity, completeness, and relevance of the information provided. Well, verify against some sort of a criteria. Then the auditor will compare their own understanding based on observations and evidence gathered during the audit with formal description provided by the service organization. What do we do next? Well, take a look, compare. How do we understand the system based on observation and evidence against what they told us? This steps checks for consistency and accuracy how the service organization described the system, portrays their system. And if we're dealing with trust services category, this is going to be the suitable criteria, trust services categories refer to specific areas such as security, availability, processing integrity, confidentiality, and privacy. Depending on the scope of the audit, one or more of these criteria will be evaluated. So the auditor needs to ensure that the service organization description accurately reflect how it manages these aspects of its services. This is the whole purpose. The criteria is trust services criteria. So this is basically the big picture. Now, how do we know whether they are meeting the description criteria or not? To be considered meeting the description, the system must, of course, describe the implemented system accurately. This means that the description should give a true and a fair view of the system as it's currently implemented. It should include all component processes and controls that are in place. It should also include relevant information for each description criterion. The description should cover all relevant aspects of the description criteria. For example, if a criterion relates to security of data, the description should detail the security measures in place. We should avoid any omission or distortion. The description must not leave out or misrepresent any information that users of the report would likely consider important for making decision. And this ensures transparency and reliability of the report. When do we fail to meet the description criteria? Well, if we consider that the description is not presented in accordance with the description criteria, if it misrepresents the existing of the IT component. If the description claims that certain IT components are part of the system, while in reality they are not, well, it misleads the report users. Or falsely claim implementation of processes and control, well, they're not really being performed. that's deceptive and undermine the integrity of the report, or if the description contain any unverifiable statement, if the description includes statement that cannot be objectively assessed for accuracy. Well, this could obscure the true nature of the system and impair decision making. So it's good to kind of know the description, understand the description, make sure the description meet the criteria. But the next thing we want to do is to make sure the descriptions are being implemented properly. In a SOC 2 engagement, the process of verifying whether a service organization's description meet the description criteria involve not just reviewing the content, but also assessing the actual implementation of the control stated in that description. Are they actually working? So we have to evaluating the stated control. The service auditor examine whether each control that the service organization claim to have in place is actually indeed operational. Yes, you can have it on paper in the description, but implementation is important. Implemented in this context means the control is actively functioning and being used as part of the organization process. Well, if during the evaluation the auditor finds that certain controls are not implemented despite being listed in the description, they might request that the service organization revise the description to remove them or correct the mention of these controls, because you're saying they are implemented, but they are not. They're in the description, but they're not being implemented. So if they're there and they're not implemented, it means they are not there. This is crucial for maintaining also the accuracy and reliability of the report. Also part of implementation, upon the auditor's request for modification, if they did ask for a modification, now it's the responsibility of the service organization management to do what? Update the description accordingly. Well, if they don't, if the management fails to make the requested changes, it can lead to a discrepancy between the reported and the actual state of controls, because what you're saying is not really happening. And how would that impact the conclusion and the report presentation? Well, it could impact. The auditor needs to consider how the unimplemented controls, the controls that they are claiming to have but they're not implemented, how does it affect the overall assessment of the system description? If it's significant, it could lead to a conclusion that the description does not accurately reflect the system, and the auditor under those circumstances must decide how to reflect the finding in the report. Well, this could range from a qualification about the accuracy to what? To an adverse opinion, when we talked about those two conditions in earlier session. Now we're going to take a look at few evidence gathering technique that the auditor can use to learn about the system. Those are not comprehensive. They're a list of things, basically evidence gathering. Okay, one is discussing with management and personnel. Engaging in discussion with the service organization management and other personnel, especially internal control people, helps the auditor understand the context and intention behind management assertion in the system description. That's important. Talk to them. These conversations provide insight into how the controls are supposed to function and any recent changes or challenges. They will tell you if they changed them recently, what challenges are they facing. Examining service commitment and system requirement. And we talked about service commitment and system requirement in two separate recordings. And this is part of evidence gathering. This involves assessing whether the documented service commitment and the system requirement align with the specific circumstances of the engagement, ensuring they are appropriate and sufficient. Service commitment is what the company is claiming to provide, and system requirement is the system that they have in place that will achieve their objective. Inspecting risk assessment documentation, reviewing the document related to risk assessment and mitigation plans that could provide evidence of how the organization identifies and manages its risk, which is also crucial for maintaining system integrity and security. Observe control implementation. Just look at what's going on. How are they implementing those controls? The auditor can verify firsthand, which is a good evidence, whether the controls are operational and effective. Reading contract and marketing material, analyzing the contract with the user's entity, and this is important. Why? Because the company makes service commitments to who? To the user entity. And they claim that their system is servicing this. So we want to know what's their contract between the service organization and the user entity. It's going to tell us. Now we can look at this and look at the system description and determine whether the system is working properly, because those are the intended users. User entities and business partners, along with marketing material, helps the auditor understand the commitment the organization has made externally, because they made a commitment to someone. Let me see what commitment they are talking about, and will the description of the system and the implementation of their control serve that commitment. This is pivotal in assessing whether the system description matches what's being promised to the stakeholders, users, entity. Could be more than one user. Understanding the risk governance, reviewing document like board minutes, organizational charts, helps the auditor understand the governance culture related to the risk management and control processes. Simply put, looking at their control environment, this can indicate an oversight and direction provided at a higher level of the organization. Again, telling us more about the control environment. Reviewing communication of responsibilities. Documents like employee handbook and codes of conduct are essential for understanding how responsibility related to the system securities are communicated and understood by employees. Again, this is part of their internal control. Analyzing and monitoring documentation. Well, internal audit report, this is important. Third-party assessment and presentation to audit committee provide insights into ongoing monitoring and evaluation. So you want to look at those documents and analyze them to see what they are saying, how they are implementing those controls, are they following through. Also evaluating subservice and vendor contract. Remember, not every vendor contract is a subservice, but some are. Reviewing contract with subservice organization and vendors gives the auditor a sense of external dependency of how these relationships are managed. Remember, if we have a subservice, we have either to use the carve-out method or the inclusive method. Assessing incident response plan. Examining documentation on incident response and recovery plan. How do they respond? That's critical to understanding how the organization plan to handle and recover from potential system disruption or failures. How else can you collect evidence? Walkthrough procedures. Again, as I always mention, studying audit before you study information systems and control is important, because walkthrough is something that we do in a traditional audit. Walkthroughs are a key auditing procedures used to assess the effectiveness and implementation of control within a service organization. So here what the auditor would do is will select a transaction, event, or activity and allows it to go through the whole system from start to finish. And this involves tracing the transaction using the same document and routes that service organization personnel would use. And this step would help the auditor see the transaction journey through various controls and checkpoint, ensuring each checkpoint is functioning as intended. And sometimes we pass those paper through those transactions to get to the final answer and see if we are indeed getting to the correct answer. And throughout the way, there are checkpoints, control. We make sure those checkpoints and control are working appropriately. Also, we could involve inquiries, observation, and inspection. Inquiries, basically asking questions. Again, this is a good way to start about the processes and the control. But again, when they answer, you have to look for evidence or ask for additional evidence, because they can tell you anything. You want to verify. This includes discussing how controls are designed and how they should function. Observation, watching the controls in action, provide real-time evidence. As we mentioned earlier, this is the best time of how they are performed or whether they are effective. As we talked about earlier, reviewing relevant document, flowchart, policies, procedures, record, could help the auditor verify the design and consistency of controls. Tools like flowchart, questionnaires, decision table can also help in understanding complex process. Also, we want to evaluate the description disclosure. Sometimes there's additional information about the disclosure. The auditors needs to make sure that the description is not only accurate, but also not misleading. So this involves careful analysis of the information provided against the evidence collected. If it's too much information that it's not really being implemented, we have to know this. So we have to assess misleading information. We have to examine whether the description could be considered misleading within the context of the engagement. Because remember, when we engage to audit a particular area, the description has to be specific to that particular area. You cannot have information that's misleading, that's out of context. So a description might be misleading if it omits crucial information or present information out of context, either keeping something out or putting something that's should not be there, or overstating the effectiveness of the control, or contain any inaccuracies that could affect the decision of the report maker. Simply put, misleading. Misleading information could be by adding information or omitting information. Also, we have to look at significant interpretation. If significant interpretation were made during the application of the criteria to the engagement circumstances, that should be disclosed as well. This could include interpretation regarding the scope of the engagement, the definition of the control, or the assessment of the control effectiveness. So how are we interpreting what we're doing? Also, subsequent event, we'll talk about that in a separate recording. Events that occur after the period covered by review but before the issuance of the report might necessitate additional disclosure, especially if they could significantly affect the user's understanding of the report or the functioning of the system. And we're going to have a whole recording about subsequent events. Subsequent event is also important in your audit course. What do we have to do if the description is misleading? Well, the first thing we do is we ask the client to amend it, to change it. If the auditor believes that the description is incorrect or misleading, they would request that management amend the description. Makes sense, right? And this step is crucial because the integrity of the auditor's report rely on the accuracy and completeness of the system description. Well, what happens if management refuse? If the service organization refused to make the necessary amendment, the auditor must consider that on the audit opinion. And we talked about this. Depending on what we are looking at, is it a serious issue or can we qualify? So we might give a qualified opinion or we might give an adverse opinion. So depending on the situation. So impact on the auditor's report, qualified opinion if certain aspects of the description are misleading and these areas are not central to the overall function, we might issue a qualified opinion. It becomes a judgment. If the misleading aspects are material and pervasive, I'm sorry, you're going to get an adverse opinion. Suggesting, it's not sorry, you're going to get an adverse opinion, suggesting that the description cannot be relied on. In this situation, it is necessary. Let's take a look at this multiple choice question from farhatlectures.com. Which of the following is a critical aspect of performing a walkthrough in a SOC engagement? Is it reviewing the accuracy of financial statement? Walkthrough, is this what it does? Does it deal with the financial statement overall? Not at all, not the whole financial statement. Ensuring compliance with international trade regulation. Could be if that's the engagement is about, but but walkthrough is not specifically for that. I would say that's too broad, just like financial statement. Tracing a transaction from initiation to completion. Yes, this is what a walkthrough. This is the definition of a walkthrough. Why? You want to make sure when we get to the output, the output is correct. When we go through those controls, checkpoints throughout the way from initiation to completion, everything is working properly. Like you're simulating a transaction from A to Z and monitoring the process, making sure everything is working properly. Everything means the controls are working properly. I would keep C for now. Evaluating the marketing strategy for service promotion, not at all. It's out of context here. So the correct answer is C. What should you do now? You want to go to Farhat Lectures, look at additional lectures, additional MCQs. That's going to help you, especially if you're studying for the Information Systems and Controls exam. Invest in yourself. Study for your CPA. Good luck and stay safe.